Okay, can you guys online hear me? Perfect. Roman, can you say something real quick so we can test if they can hear you too?
Yes, hello. All together? Can you hear me? Does it
Perfect.
work?
Okay. So I'm sorry for the delay again. I don't know. I feel like every single time we run into new tech issues. I hope this works for you guys in the audience with the audio. I know it's not ideal. If you have an issue with understanding, just feel free to interrupt and ask us to repeat again. Okay, cool. So as you can see, it's a bit of me trying to host all of this by myself. The ones of you who have been here before know me usually behind the camera and not like in front of the camera. So unfortunately, Mark, head of Europe, is sick today. So this is why I'm trying to run the whole show. So in case there are little hiccups, please bear with me. Okay. I will just give a super short intro about F10 for those of you who are with us for the first time. And maybe I can find my clicker. Here we go. Okay. I hope online you can see it. Maybe Magdalena, you can check real quick if that works. Okay, perfect. Cool. Also online, if you have any questions, just put them in the chat. We have people from our team online and here in the audience who will then raise them so we can answer them. So welcome everyone to the first Lunch and Learn of this second half year. We're talking today about embedded finance. We have our expert online, Roman Hofmann. He's a mentor with F10 and has offered to run this session. As mentioned before, usually we have our in-house expert, Mark, with us to host the session. So today I'm a very sad excuse. But I'll just try to run it. If you have any questions out here, feel free to ask them. We have a microphone for the in-person audience, so the people online can also hear you. And I think that's about it, what you need to know about the session. So about F10, it all started 2015 as an in-house project by SIX, the Swiss Stock Exchange, and since then has developed in this kind of global ecosystem for innovation in banking and insurance. So we started with one single hub here in Zurich in Switzerland and have now kind of like spread all over the world. We have a hub in Singapore. We have a hub in Spain as well, and we have multiple hubs in the building as we speak in different locations with our corporate partners. So as you can see, next to SIX, we have a vast amount of other big corporations. Why do I have
That was me, sorry. I'm out, sorry.
Sorry. Okay. Yeah, so a lot of like leading corporate partners, and we're very excited to just build with them this whole ecosystem and foster this, innovation with our tech startups and our corporate partners. As mentioned before, we pride ourselves in having like this global reach and local impact. So right now we have these 3 locations where we're active. And building continuously on new locations with our partners, which also means that we can really like easily adapt to our partners' needs and basically offer them whatever they're looking for. Here you see our alumni. I'm sure some of the names you're familiar with. We have a bunch of very well-known names, for example, Yokoi, Sonic. For example, before I came to F10, I worked for Enterprise Bot for one of the F10 alumni. So it's really a huge network and a lot of value that we can provide and that they provide for us as well. Cool. Any questions around this? Otherwise, I would hand over to Roman. Online?
No.
No. Okay, cool. Let me just quickly end this. Stop sharing. Okay, Roman, you can share your screen. Let's see if this works. So exciting. I love how we've been with COVID for like over 2 years and we still have not figured it out. How does it actually work? I run into this all the time. Okay, perfect. We can see it. Not anymore. You're unable to unmute. Close the I don't know if I can unmute you. I don't think I can. Can you close your presentation real quick? Perfect.
I didn't know that you have to do that before you share the screen.
Yeah. I feel you.
The button disappeared. So hopefully this time it will work. So what I will do today is just to explain you our idea of orchestrating the financial service industry. It's one step further than just embedding, and I will try to explain you why I am convinced that this is the future, and there will be a long journey with interesting project. Just to give you a bit of my background, why I am talking about that. I'm just a practitioner, so I worked on in corporate companies. I worked as a consultant for many years. Before I decided with mid-40s in the ideal age to start with my first startup, Tony Digital. Maybe some of you know that. They sell car insurance over Post Finance and have some insurance products over Migros. That was my first baby. Before I decided to start the second one, which is Paladino. My first one was more focused on products. Paladino is more focused on customer interaction, and I'll come back to that. I think I'm since 2.5 years with F10 about that. It's a good time. Target of today is really I want to explain you what we understand by the term embedded insurance, embedded finance. You can hear that everywhere and read everywhere. Everybody's talking about that, and I think there's a big difference between real embedded and the so-called embedded insurance and embedded. By the way, if I'm talking about insurance, it's equal for banking. Just my passion is in the insurance industry, but we collaborate very closely with Auditive. We also have a big project together, so it's completely equal. And you excuse myself if I'm just talking about insurance. Same for banking. Then I will try to explain you why there's room of improvement in this sector, and that embedded is not a target or just one step on the way to a target, and what orchestrated might be. So the content of today's motivation, some background, why we should do that, what is embedded, what means orchestrated, and I'm open for discussions in between, so please don't wait with your questions till the end, just raise it. Let's start with the motivation. There's some factors, and probably some of you have seen them already, and it's always surprising again. And there are many studies. 70% of the customers, and I'm really talking about banking and insurance, 70% of the customers are not satisfied with what they get, with the interaction, the trust factor. So they made a study in Germany and asked customers, who do you trust more, Lidl or a traditional insurer? And I think Lidl has a trust factor of 92% regarding insurance. So we did something wrong in the past. And I also worked for insurance companies, so I've been part of this as well. We have normally one contact per year in the industry sector, in the insurance sector. That's when we send an invoice, and this is normally not a very positive contact, so because you have to pay. And we are convinced that about 35% or 1/3 of the market is just untouched at the moment because there are no products or we do not see the opportunities. And I think there's a lot we can do in the future for our customers. From my perspective, the reason for that, and I can tell you, I worked for Unilever, so I worked for consumer goods, and I think we did it much better in that industry. In the insurance and banking industry, we still have a very focus on pushing products into the market. We do not ask customers, what do you really need? How do you want to have the product? How do you want to have the process? Just to give you an example of one of the biggest insurance companies in the world, they explained me how they do innovation. They start with their systems and check out what the systems are able to deliver in the future as well, what they could offer, what kind of products, what kind of processes, and try to develop new offerings based on that, and only check at the end of the day whether there's really a market or customers to buy those products. So we still have a push and not a pull. And I think that's the main driver and the main issue why we have this situation that customers are not satisfied.
We have a quick question from online if you want to get into that.
Yes, I just can't see
it. Let me see if I can. Can you see it if I do this?
No, because I have the presentation mode on.
Okay, perfect. So I'm going to read it to you. This data is interesting. We have had neobanks and neo-insurances for the last 10 plus years, yet the scores are so low. How do you explain this data conundrum anomaly?
I don't know whether I really understood the question correctly. I mean, this is a generic number and more focused on, let's say, German-speaking market. It's different in other markets. And we have neobanks, we have neo-insurance, but normally they're in a very specialized or very narrow market sector, so that the impact on the overall market is still very limited. If you go to other markets, like, for example, UK, you have about, I think, 90% of the market is online, but customers are still not satisfied what they get. From my perspective, and we'll come back to that, is most of those startups you see in the market, I like them a lot. I have built up one as well. But you just wrap existing products in a different package. They're still the same challenges. You do not change a lot of the way of interaction, and I will come back to that. Just give me a minute. We'll get there. But from my perspective, to be successful on the markets, you need to bring needs of customers, the access to customers, and the solutions offered in a balance. And that's, from my perspective, the triangle you should work in. And that's what we normally miss in the current industry. Let's just check out, what kind of systems do we have? What can we do with it? But an insurance company has normally no natural interaction, no natural access to a customer. Or do you really want to buy household protection or car insurance? No, you don't want to, you have to. So you only buy it if you really have to, but not because you need it or because you want it. And that's exactly the issue we have. So the customer does not want it, doesn't understand it, so the access is missing. And this is an overall challenge we have. And as normally you have an inside-out view in the financial services industry, you do not understand what customers really want. And then you limit yourself you have those big companies, you have those big organizations, those big and expensive and complex systems. You can't change. If you want to launch a new product, it takes sometimes years to launch a new product. You can't be reactive and design flexible solutions. That's exactly where we have the opportunity. How I see the different models in the market. We have traditional models. Independent means you have you have insurance products, you have banks, you have third-party companies that just work for each for themselves, without any interaction. And then if you go one step ahead, probably you can buy insurance in the same house where you have some other products. That's also not very interesting. What we normally see in the market is that you have somewhere, let's say between a saving account and a mortgage, you can also buy a car insurance or the household protection. That's what you see, I would say 90% of the markets. And most of the companies already call it embedded. It's not, because you don't expect a household protection if you are in the bank. It's just there, but it's not embedded. Embedded, from my perspective, means the product is connected. That means if you, and there are some really good examples in the market and simple ones, most of you know, if you buy a TV, you normally can buy directly a warranty extension. That's, from my perspective, embedded, because it's connected with the product. You get the product in the moment you buy the connected product. And that's where we have to go to. It's a natural connection then between bank or insurance products and third-party products. That's where we should get to. I don't want to explain all of the details. I think I can also send you the presentation that you can probably download it. But there's a big difference between integrated and embedded. Integrated is normally pushed by insurers or banks. So you see that in many cases in the market, just to give you an example, so the Mobiliar and Raiffeisen work together. This is traditionally pushed by the insurance company. It's not very innovative. It's just a collaboration between the two companies. And this is then, for me, an integrated case. Embedded means the brand of the third-party company is in the focus. You buy something, you buy a warranty extension in the moment you buy a TV. So the brand of MediaMarkt, for example, is in the foreground and not the insurance company. So it's already a change between push and pull. Does that make sense, or is it still too fuzzy?
It makes sense.
People are nodding. It made sense even to me, so I think we're on a good way, like good path.
If I tried to design the models to show you the difference. Normally, what you have is just a collaboration between a third-party company and, let's say, a bank or insurance company. And it's a one-to-one relation. They just push what they have in their pocket, they push it to the front. So the product stays the same, the process stays the same. It's just that you can buy the product in a different place. Embedded means that the brand is not that important, the brand of the carrier or the brand of the bank, and the process is already less important because it's integrated or embedded in the third-party world. There are many differences in details. I can explain you that for hours. Just to highlight a few ones. In a traditional collaboration, the brand of the insurance or the bank is in the foreground. And here, for example, if Lidl would work and offer insurance products, normally you buy a Lidl product or not a whatever insurance company product. So the brand here of the third party is in the foreground. Why does that make sense? I told you initially that the trust factor of Lidl is much higher than the one of a bank or insurance company. A Lidl, for example, has once or two times a week contact with a customer. A bank, insurance company, once a month, once a year. So it makes completely sense that we have a different company in the foreground which has a natural access to customers. And then the second part is important as well. The customers in traditional models, normally the customer disappears. That means as soon as the traditional third party channel has offered or opened the contact to the customer, they disappear then immediately in the world of the third party. Just to give you an example, maybe some of you have seen that IKEA in Switzerland sells household protection. As soon as you start the process to buy in a household protection, you disappear. You directly move into the world of iptiQ, a daughter company of Swiss Re. So you leave the world of IKEA and end up in the iptiQ world. So then IKEA is nothing else than they make contact between the customer and the insurance company. In embedded insurance, this is different. The customer stays in the world. So he would log in again in the IKEA cockpit and see the insurance product in the cockpit of IKEA. That's a big difference. So the customer stays here and does not leave the world. That also means that the data will remain with IKEA. In the traditional world, as they did it here, the insurance company collects the data at IKEA. They cannot learn and grow. There's no potential for upselling and cross-selling then anymore for IKEA. And that's, from my perspective, a big opportunity, but it could be solved in a much better way. A different company which calls themselves Embedded Insurance is Salty, but what they do is just they push their products into third-party channels. But then it's still a one-to-one relation, and you only can buy what you get from Salty in the way you get it from Salty. So it's still, from my perspective, it's still not embedded, it's still integrated. A little bit better example, most of you have seen that probably. If you buy a TV or a phone or anything, you can immediately buy protection, death protection, or warranty extension, whatever. But you also can buy.
Wait a second. Roman, 1 second. Now your connection is a bit lacking, I think.
So,
can you mute and unmute quickly? Oh, no, you can't. Because your connection is bad, it says. Or weak. I think that's the word. We can't really hear you properly.
Should I turn off audio? Turn it on back?
No, it's on his side because his connection is weak.
Perhaps to take the video away.
Yeah, maybe you want to turn off your camera.
Yeah, I don't know whether it's. Can you hear me again?
Yeah, now it's good again.
Sure?
Yeah.
Hopefully.
For now.
Let's try it again. Yeah, it's Swisscom, sorry. Yeah.
And here we have it.
Been exactly in the Swisscom example. So we have been in the Swisscom example, huh?
Yeah.
A bad moment for Swisscom then. What they do much better than, for example, like they sell insurance company in the moment. You really need protection, or they also sell covers or wallets or whatever, which is connected to the product and just in the checkout process. So you get the add-ons offered in the moment you have the need, and they make that part much better. But that's still very traditional, and that's where we have to go to. In the traditional world, we have seen even embedded means we are still talking just about the collaboration between two companies. It's always focused on the two companies, and so I'm talking about instruments in a band and not about the band. So we have to play together. We need orchestration of the different instruments to have one at the end one song and not 20 instruments playing each other, each different song. We have to have at the end one song, and they need to play together. So to get there, we need to have an access to customers, because even a bank and a third party company, and normally you see banks and insurance companies doing working together, they still have no access to customers. So we need somebody else which has an excellent access. We need somebody else who has excellent products, and so on, and bring all that of them together. That's what we need to get. We still need a customer base. It's not solved with embedded. If you start as a neobank or a start of one of those insurance startups, you still start from scratch, and that takes a lot of time and costs you a lot of money. We still have a trust issue in the embedded model. Because you can take whatever bank or you can take whatever insurance company, the trust factor is still around 30% and not 92 as legal. The complexity is still high because you still get the products and the processes as you had before, and normally it's still one size fits it all. There's so many startups in the insurance sector that try to do embedding. They offer one specific product, they push to different channels. And by the way, my first startup does the same. They have their car insurance product, they have their household protection, they just push it to different channels. And that's still one size fits it all, which doesn't work. That means what we need to do is change the focus we had before is on the collaboration. We need to change the focus on customers and bring all the models together into one. Because depending on the situation, it might be that an independent product is much better than an embedded in product. It's depending on the situation, it's depending on the customer, it's depending on his needs. That's why we are not talking about models in orchestration, but about the collaboration, how we work together. So I haven't seen an appropriate model on the market or which I could copy. So we try to design it ourselves, because from my perspective, the market is at the very beginning and it will be the future. And we have already seen some examples working in the market, but not in Europe. So what you need to do in the orchestration is you try to select the best partners in the market, which can offer different kind of products. And you start on the other end. Do you know what we did in the past? It's just we started here. We checked out what is possible, what do we have in the pockets, what can we offer in the market, and try to offer that. We try what we need to do or try to do in the orchestration is we start on the customer end, on the end means on our client's end. So we see what kind of customers they have, what their needs are, how they behave, what the process is, what the interaction is, and try then to identify the appropriate solutions. And then we go back to the customers and banks, to the insurance companies and banks, and try to select the right partners, which can either offer directly the products we need, or we design the products we need we need it in the way we need it, and then bring it to the front. That means we do a consolidation of different solutions, of different components, and sometimes just single and little pieces, bring them together and push them in the third-party channels. And why do we have to do it, and why can't the bank or insurance company not do it? It's very simple. Normally, if you have this collaboration, which I already mentioned, is between Raiffeisen and Mobi, you only have Mobi here. But some people do not like Mobi, or the product do not fit their needs. So you need to have here Swiss Life and Zurich and some other companies in the background, and you need to bring them together. And believe me, Mobi doesn't want to sell Zurich and Swiss Life products in the Raiffeisen front end, so they block the channels. That's why you need a third party which is able to bring everything together, to reshape the processes, to embed that and integrate it in the third party channel. And then you need also the way back. For example, if there's a claims or if there's just a simple question or changing the model, you want to change the coverage, you also need to be able to bring everything down again, and just from one entry point. I mean, the customer just has one entry point. It doesn't matter whether he has a bank product from bank A, B, C, or D, or an insurance product from A, B, C. It just has one issue or one question and has one touch point, which is the third-party channel. So what we do is just the orchestration of a big ecosystem of different, and not only the ecosystem of the partners, but also the processes and everything which is connected to that. And there's a little bit more, and I can tell you, we are working together with Auditive probably on the biggest cases, at least the biggest case in Switzerland you can have, and probably one of the bigger ones in Europe. It's a lot of effort because those customers have no clue about insurance and no clue about banking. So you need to explain them the potential, and it's a lot of convincing. It's a change of their also of their way they behave, because let's take a retailer, let's take Lidl again. Normally they sell goods you can hold and feel and or smell, and bank and insurance products are just virtual, and that's a big change in their mindset. So that means we have to consult and teach them a lot, but we also have to run at the end everything. And it's not our idea to have a big organization. We want to stay as orchestrated, very slim. That means we just push back everything to the third party. So it's a change of their offerings, of the role of the insurance companies. They lose the direct interaction or the touch to the customers. So because we are in between and the third party channel is in between. So at the end, insurance and banks are just produce products, and the products we ask them for, they are professionals in operations, but the third party channels as Lidl is then the professional in the customer interaction. They know how to serve a customer, how to interact with the customer. They know that much better, and we bring the two worlds together. That's what we do and what you have to do in the orchestration. Just some of the benefits. There are multiple benefits for customers. From our perspective, if you have multiple suppliers in the background, you should be able to offer the best solution in the right moment. And it's not just the household protection you get, but you get the best household protection which exactly fits your needs. You should have a fair pricing because you only pay for what you really need. The processes are much easier because we do not reuse the insurance processes. We reuse for example, the retailer processes, which are normally much easier and cost in a self-service mode. And you should be able to get everything in one place. And because if you go to an insurance company or you go to a bank, even especially if they only offer very narrow kind of products, you only get parts of it. You can only cover part of your needs, and you have to then go to 2 or 3 or 4 places. And the idea is that you get everything in one place. It's also very interesting for our clients, and I just highlight the revenue because I didn't mention that before. In a traditional model, in a traditional collaboration model, you get just a fee for the connection you make to the customer. It's normally a one-time fee, and in the model we work together is that you have a yearly recurring revenue. Means the longer the customer stays, the more you earn as a client. And this makes a big difference and can be, believe me, if we make a business case together, it's a lot of money a third party channel can earn with bank and insurance products if they do it in the right way. Because you can reduce the distribution costs, you can reduce many of the process costs, and that means a lot of revenue then for the third party. There are also some challenges. Some of them are already mentioned. It's the two key challenges on the distributor side are the mindset and the organization. Different products, you can't feel the products anymore, you can't see them anymore, and normally they also don't have the skills. And it's not just that you buy a new kind of milk, which you put in your shelves. It takes time. It takes 1 year, 1.5 years till you're up and running. But also on the supplier side, it was really funny when we made our first evaluation for the partners on the insurance and banking sides. Most of them wanted to play the game. 50% of them immediately realized that they are not able due to the systems, and most of the others then failed as well due to the organizational limitations they have. At the end, we had really only a few banks and insurance companies left which really want to offer the products, but we are still in a very hard fight because they still have their limitations in any kind. But it's really funny because we work together with some of the biggest insurance companies in the world, and they really want to become innovative and they want to become flexible, but they're struggling every day. It's really a funny game. So we're helping them. We as a small company are helping the big companies to become more flexible and more innovative. And as a last slide, just maybe some of you have seen that it's the first study because the second one you have to pay for. It's from Simon Torrance when he, I think it's about 1 year ago or even more, when he published that those figures, what embedded insurance might be in the future. He was talking about the $3 trillion premiums market in the next 10 years. I think it will be more. And he was mainly focused on embedded insurance, but Simon and me are, in the meantime, on the same line. He's also convinced that it needs more than just embedding. It's the right way is the orchestration. And me, absolutely the same on the finance side. It's the same potential for banks as well. And there are already some big and great examples in the market. Maybe you have seen that Ant Group in the Asian market with a strong focus on banking and less in insurance, but they're growing now insurance as well. And on the other side, you have Walmart. I think they make 11% of their profit from insurance at the moment. So it's a huge market and a huge market opportunity. That means we just bring the existing players together. You don't have to create a new startup. Just take what you have and bring it together in a different way.
Cool.
So questions?
Thank you so much. I think we're ready for some Q&A. I know I have a lot of Qs. So just the example you had right now with Walmart. So people go, I'm sure you all know Walmart, right? So people go to Walmart and buy insurances there?
Yes.
So it's like me going to Coop and then I buy like apples and an insurance?
Yes. Have you already seen the Tesco, as well, huh? Which is much closer in UK.
Yeah.
Tesco is one of the biggest players for insurance products in UK.
Huh. I feel like I want to say, I'm sure this doesn't work, but if you think about it, Migros has their own like mobile phone, kind of like they're also now a provider of mobile phone contracts, and maybe it actually does work. Because before you would just go to Migros for cheese, and now you can also get your mobile phone contract there.
So do you have a shop concept? So what is that?
Yeah. Like? What do they have in Walmart? Do you know, Roman? Do they have like shop-in-shop concepts?
Walmart, I don't know exactly. I can tell you more in Tesco. I mean, Tesco is also a retailer, but they sell household protection, car insurance, the big player for car insurance. Even they don't sell cars, as far as I know. but they have a very high trust factor. And I think they started with many years ago with just household protection. They sold. You have been able to buy household protection in a Pringle can. So you bought the code, which you have been able to activate at home, and then you bought the household protection this way. I mean, especially retailers have a tremendous access to customers, not only to customers, but there are many touch points. If you simple ones, you sell a bike, you can sell immediately death protection, liability, but you could also sell a loan if you're not able to buy those expensive e-bikes for 7,000, 10,000 Swiss francs. You can buy your bike over a loan, so immediately can sell the bank products in the same moment. Or you can connect it then the bike with the helmet, with the locker. Then you bring all the worlds together. Or due to the behavior, there are some. I know it sounds very cliche. Huh? It's if you observe that if let's assume the example, we have a single household protection. A man or myself, I bought the household protection just for me, myself, and I. And then I started buying new pants, new carpets, new furniture, whatever. So there are some patterns which might indicate that somebody else will move into my flat or in my house. So that this is an indicator again, so you can then start to sell insurance, because in this moment you have the need for additional insurance products. Mm-hmm. Or the other way around, I increase my household protection from single household to family household. There's another opportunity to sell the traditional products, furniture and carpets or pants on the other side.
Hi, Roman, it's Henrik speaking. There are actually other examples which are better known from they're not so new, but they are quite known. Once you tried to buy some airline tickets, and there was the combination you were able actually to buy as well travel insurance as well, and that was an embedded product, which is very obvious one, and it's not just a trust factor. It's really to be on the same place where something happens. So if I go and buy an airplane ticket, then it's obvious I could have interest to protect this amount and to buy a travel insurance. So this is one of the examples I know, which is really not new. It's about 10, 12 years old, but it was a good example of embedded product.
Exactly. There are cases in the market as well. The warranty extension is also one of the best examples, but there's more. I'm pretty sure that, for example, a retailer is able to sell almost every kind of insurance product to customers. I'm very convinced they have enough touch points, and you have different kind of touch points. Let's take the pet insurance. You sell food, so you have indirect connection because people already have, for example, a dog or cat, so they buy. So there's no direct need because you only buy this food, but you know that the customer has an animal, and you can sell him probably then the insurance on top. But if you, for example, sell what is a terrarium? Is terrarium in English? Mm-hmm. If you sell that, you know that in this moment, or if you sell even animals, you have an animal shop, pet shop, and you sell animals, you know, in that moment, there's the direct need. So you have different access points, but you also have different moments, situations where customer is and different needs. If let's take again the Coop. Coop doesn't sell cars, but they have about 400 petrol stations in Switzerland. So you have access to car drivers. Even you don't sell the car, so you have access to car drivers, and probably you can use that to sell car insurance. So you have the access, but not the connected product. So that's why I'm very convinced that retailers and telcos and some other companies. I'm mainly talking about the big platforms with high number of customers, with a high frequency of interaction. They are, for me, the perfect partners for insurance and banks.
Yeah, makes sense. We have two questions from
Yeah.
online. One is from Gökçe. She's one of the co-founders of Crypto Index Series, one of our alumni startups. He's asking if you agree that with the digital assets, it's actually making it easier to embed these additional services into financial services.
Yes, definitely. I mean, definitely you can. What we do as well with the big case we have at the moment, we start online. But what would you think, for example, if so we have then also to prove that it will work at the end, because we will. Do you expect, for example, a retirement product? If you go to Lidl, would you buy a retirement product in the Lidl? Maybe we have to prove our model we bring on the market. It's easy to bring it online and to test, and because you also can, you're much more flexible. You can change the process within minutes. In the off, but we also want to go offline. It takes much more time, and normally to embed those products in offline channels, in retailers, it takes years. But also, if you want, you just need to change everything. When we launched the Tony car insurance with Post Finance, we also wanted to go to the post clerks. They told us about 2 to 3 years till we are on the front to just to embed it offline. Yeah. And I mean, but you can use the offline touch points. You buy tires or you sell cat food, you have a touch point. So you have a touch point to sell the product, but normally then should go home. You have a Leporello or something, a code. You can have some savings on your insurance product. And the next question from Pete is very interesting. I think this is really, really, really important. Legally, there's a contract between the customer and the bank or the insurance company, and not between the customer and the third party. This is the legal view. But what you can agree is that the customer still belongs, marketing, and from a marketing and sales perspective, belongs to the third party. And that's the main difference. So the customer stays in the world of the third party channel, and also the data. You just push on the data from the third party channel to the banks, just the data which is really required. And there's something on top. If we go back to the Lidl example, Lidl has a huge experience and a huge huge collection of data. I'm pretty sure from an insurance perspective that you have a much better collaboration between the shopping behavior and the risk. The connection is much better than, for example, between, let's say, age and the risk, or the sex and the risk, or whatever you use as factor from an insurance perspective. So you probably in the future we only use this data of shopping behavior, and we can make a much better and better means a precise offer from coverage and also from pricing perspective. So it's important that this data belongs at the end to the third party and not to the insurer or bank.
Yeah.
But then also,
And that's by the way also a big break in the traditional. We have big discussions with the insurers and the banks because they are convinced that they are the owner of the data, and that's some of the hot discussions we have at the moment.
Yeah, we had another question.
yeah, I guess this is connected to this because I have a lot of discussions with banks, right? Because right now they are trying to stay relevant, right? And now in case they are losing this data, right, or these insights, which I mean now data is key, right, where you can learn a lot about your clients, I guess they would really struggle, right? Because then pretty much you are replaceable because the client doesn't really have the connection to the insurer, to the bank, but only to the retailer. And then we as a bank are pretty much replaceable, and then potentially it's only a matter of price, but not a matter of like service or something else, because this is not required.
Yeah, I think this is a strategic discussion because you have to decide whether you own the product or own the customer. And banks are not really precise on that. They're trying to evolve. And this is a problem, exactly that's why, because they're selling product, but they think they should own the customer as well, or vice versa. So I think this is a problem, a strategic problem for banks.
Did you catch that, Roman?
Not everything, because the acoustics is not. I wasn't able to hear everything. I mean, maybe I got part of it. But you asked whether the banks are not happy because they lose the connection to customer, which is correct. They lose the direct connection, but they have potential to a larger community. Lidl has already, I don't know how many million customers they have in Germany and Switzerland, so they have access to a new number of potential customers. What we can offer them is they can also consume some of the data from Lidl. So we offer the banks and insurance companies access to this pool of data. So they can now start to play with this data, and they're overwhelmed because the number of data is just too big. Or what we could do as well, let's assume Lidl sells or offers their own credit cards, and you go to MediaMarkt and buy a TV in the MediaMarkt. We can see with Lidl then the transactional data and see that you bought electronic goods in MediaMarkt, so we can make you a direct offer over the transactional data. So that we can offer then suddenly additional data to our partners.
I guess what we can also see, for example, I used to work in China for the last 4 years, and there, I mean, you mentioned Ant Group, right? Or you have like Tencent as well, or Ping An. I guess there it's like pretty much one big conglomerate where you don't pretty much need to leave WeChat because you can find everything there, right? So you need it for hotel booking, for ordering your bubble tea, or chatting with your friends, pretty much everything. So you don't need to leave this one app where you get everything.
And believe me, they just started this journey. I know some of the contracts they have signed with companies, and they will increase that offering a lot over the next years.
But would then WeChat be one of these kind of orchestrators, in your opinion?
They have now signed contracts with some orchestrators, yes.
Oh. I have people leaving, which means we're almost out of time. I do have one last question from the audience, or from online, otherwise I would start to wrap it up. Any like final words you wanted to bestow upon the audience, Roman?
No, I mean, just let's do it, huh? That's
perfect. Cool. So as usual, I will share the recording with you guys. And if you want to make the slides available, Roman, you can just send them to me and I'll make them downloadable for the attendees.
I think you already got it. Just use it. You can reuse it.
Perfect. Yeah, we'll do. Awesome.
Thank you.
Thank you all so much.
Thank you.
Thank you, Roman, for being
Thank
on
you.
with us. Bye-bye.
Do some food next as well, so don't be shy.
No problem.